In this video, guys, look at 4 signs the trend may be slowing. Stay tuned. Hey traders, warm welcome to you. All right, so trending markets, good environments to get in if we can get in early. When we're a bit late, we end up getting caught in the pullbacks and consolidations. But trends have multiple phases anyway. We tend to have the drive phase, the first pullback, the second, third, maybe after that it starts getting a little bit tired. But sometimes, you know, the persistency of trend is there, but we want to know when it's getting a little bit tired, because we want to A, avoid buying breakouts and fresh highs, B, start to rotate out of our longs, and maybe C, if we're thinking of shorting, this might be an opportunity to say, hey, now potentially is a play coming up. It's run its course, it might backfill a little bit, there's a little opportunity on the short side to take a little cheeky trade against the move. So rather than just stepping in front of a train, or rather than just kind of taking our profits on the first initial pulse, when do we kind of judge and say, hey, you know what, this thing might be slowing a little bit now, maybe it's time to consider some direction in the other way, or if we want to be long, waiting for a really big pullback and the trend to resume a little bit later. So 4 things, guys. Number 1 is new highs are weaker. So on this chart here, good strong drive. If sometimes we get a fresh high that doesn't continue, i.e. just as a high and then rolls back a little bit, it doesn't have the same aggression, that could be a sign that, hey, buyers aren't that keen anymore, especially when you're looking at prior moves and they were really keen. They were driving. You know, in this example, new high. Then when they finally go to a new high, it doesn't quite get the same power as it has, drifts back a little bit. That could be a warning sign. Not always. You know, again, you've got to look at everything, the bigger picture. You can't just take one thing and go, oh, it's definitely the top of the trend, because very often it might just push a drive, pause a bit, and then take another couple of days to consolidate and take a second leg. So, but sometimes it can be a warning sign. Number 2 is a volume not confirming. Very often, if volume has been confirming, again, all these things are relative to what's happened before. If volume has been confirming on the nice high drive, strength, and then it's pulling back, and now you're getting a drive, you don't really have the participation in volume. Listen, volume declining is natural, it's always going to ebb and flow, but if it's standing out as, hey, we're breaking to fresh highs, we're breaking to new levels, but volume isn't really going with it, it's pausing, we don't get the strength, or it's really contracting and it's eking out to new highs, it's really contracting, that can be a sign. Again, not always, guys, because trends sometimes do just grind on low volumes, especially on bull markets and equities. They just do that, just grind. So that's something to look out for, though. Number 3 is bounce areas not holding for long. So what do I mean by this? So very often you'll have a market that will kind of drive higher, pull back, find support, just literally kiss that support and rip straight back off again. And those are the great trades to be in if you can trade those. But if we have a situation where markets start to come back to a support level, whether that is dynamic like a moving average I've got on here, or whether that's a static support level, and it does bounce off but it doesn't really get the real spring that it used to have, then you start to think, are buyers that keen? Are sellers a little bit more aggressive than they were before? And so point 3 here, as you're driving, as this moving average is kind of coming up, and again, it could be anything, guys, it's a dynamic support level here. Price has bounced off it a bit, but it's not really ripped up like it has early on when it pulled back to support and just pushed higher. So again, little clues may be telling you it's run its course. The 4th and final thing I've got for you, which is a big one, is the news impact on the market. So when bullish news, and just my guy on the TV, bullish news no longer has an impact. So some bullish news on the market that doesn't have to be an economist or an analyst to understand it's bullish. It's just going to be, the guy's going to say, or in the media say, hey, this is bullish, this jobs number's bullish, this oil number is bullish, this earnings is bullish, whatever it may be. And if price doesn't respond in a bullish manner to it after it's already been trending, then very often, and this is kind of a good one, especially for stocks, and they have good earnings after a good run, very often that's profit taking. People are like, okay, they haven't got the same bullish sentiment, they don't feel as if they want to keep holding it or buying it as before. And sometimes that can be a telltale sign that holders are selling, sellers are getting a bit more aggressive. And so you just see what the price responsive to bullish news, and just flip on its head for bearish news, guys. If it's in a downtrend and it's bearish and it stops going down on bearish news, you might think that, hey, it's a little bit tired, a little bit exhausted, the move needs to consolidate a little bit. So 4 signs the trend may be slowing: your new highs are weaker, your volume not confirming, your bounce area is not holding for long, and bullish news no longer has an impact that it once did. Keep your risk managed, whatever you're trading. I'll see you in the next one, guys. Take care for now. Bye-bye.